Hello there, beautiful traders. Welcome back to my channel. My name is Desmond Samuel. I'm back with another banker. Now, I had to take down the previous video because of I noticed some sort of I think video freezing. Now, I'm not sure if that was from my end or your own end, but the comments I got there, they were people leaving all sorts of complaining about the video freezing halfway and all sorts of issues. So I had to re-record this entire video from the start to the end just for you guys. All right, so like I said earlier, if you're just coming across the channel for the first time, by now you ought to understand that this is a series of on YouTube where I come on here to tell you guys and show you guys the best trading setups for the weeks ahead and the kind of play that I'm currently looking at the moment. All right, so without wasting any much time, let's kick things off with GBPUSD. All right. So for the longest of times, I've been highlighting this guy to the downside. I've been screaming EURUSD, GBPUSD to the downside for a very, very long time. All right. It's okay. Let me just write this down. For a very long time, I've been highlighting this guy to the downside, and we have been falling. All right. So now we've come into what seems to look like a double top here. All right. Technically, it's the double top here, and I said to you guys that provided we have broken out of this neckline here of this range, this was the demand level here. So provided we stay outside of this demand level, a pullback is necessary for us to actually continue to the downside, and that is what is happening currently at the moment. Now, however, I would like to point out something to you guys real quick. All right, so now, am I bearish on this guy? Yes, I am bearish on this guy. Am I in a trade? I am not in any trade at the moment. All right, now if you look closely here, now let me tell you guys something real quick. Now, one of the ways to know what the market would potentially do in the future is to look at what it has done in the past. All right, see how these moves happen here. This was a drop, similar drop like this, a drop, created a supply here. Let's get rid of this. Let me just get rid of this. So it gave us some sort of supply right here, and the market acted as if it had gone, came back to retest that supply, acted as if it had gone, then it went higher again. All right. So this came on here not just to test this supply, but also to test the base of this guy here, right? The base of the breakouts. That was what happening at the moment. It came for a deeper pullback, right? And if you look, it is similar to what's happening right here. You have the break supply created, right? Just range consolidate drop. Same thing again, came back to test supply, acted as if he wanted to drop, went for a higher, pullback, a deeper pullback. All right. So at this point in time here, my ideal entry would obviously be here. Okay, which is the reason as to why I urge you guys to grab the course. Okay, because I teach you guys these things in detail, what is possible and what you should be watching out for, even if you're in profit. All right, you can see now you enter a trade here, something is above here, and you're in a trade, you make 1, 2, 3, 4 candles move in your favor, and then all of a sudden followed by this bullish candle, and then you're taken into a drawdown, and God help you, your stop loss is above here, because if it is too close to this bar here, chances are you're out of the trade already, because technically the average trader is always looking for a 1:3 risk reward. So already, if you're in this trade here and then your targets are here, you would want to squeeze this guy up onto the point so you get maybe a 1:2 or 1:3. Now, technically, if you're seeing a 1:1.42, you will not want to take this trade. You want to squeeze this as much as you can to make it at least something decent, which is like a 1:2, and that is where you get stopped out. Do you understand? So you need to understand that the market does not seek to stop you out. It seeks liquidity, and if you happen to have your stops around liquidity, areas, well, good luck with that, right? Because the market will obviously come for liquidity. The market seeks liquidity every single time. All right. So now that is out of the way, we have something similar that was trying to happen here at this other point here, right? We have something similar happening here. We've had this collapse here. A supply level created here, collapse, range, collapse. All right, it came on here, same thing happening here now. Came on here, acted as if it wants to drop. All right, and then I see us moving into this next week, because of what the dollar index and USD CAD are doing at the moment, I see this guy pulling at least going at least higher into this point here, maybe into this supply level somewhere around here. All right, now I stand to be corrected. However, that's just what I see that may happen, considering what has happened in the past. Every time we create a supply on this guy here, it looks as if this year is just out. The trend this year is out for your liquidity, or it's just out for liquidity. Do you understand? So we had this supply created here. We reacted nicely, came back again, acted as if we're done testing this guy, and we went all the way up. In fact, if I plot my trend line, so you would almost think that we are out of this downtrend here. Do you understand? And this is where it gets tricky, because whenever you have the market this close to a trend line, I would want this guy to actually smash into this trend line and maybe fake out a lot of traders out here before going in my own direction. However, this trapped a lot of traders, and then went back to test the trend line properly, even broke above and closed outside with several candles, and then all of a sudden it then collapsed. All right. So this is one of the things that you also have to be careful whenever you're plotting or you're trying to trade this guy. Okay, so we have two possible trend lines happening here at the moment. We could even see something like this. Okay, we could even see something like this. Do you understand? So that's why I'm being extremely careful, because I feel like this guy still has some more room to the upside now. However, in the events that I'm wrong, which I'm barely ever wrong, if you check my previous videos, you get to realize I've been calling out trades since God knows when, and I've been banging, banging wins after wins. So peradventure, because at the end of the day, I'm also a human. So peradventure I'm wrong. Say for instance that I'm wrong. I like to see this guy come, because we do have a supply level here. Remember the market came on here and was just ranging, collapsed, and then finally pulled all the way back. So ideally, say for instance that I'm wrong here, I'll have to wait for this guy to clear the supply level here. All right. So I'm not going to be taking any trades as long as this guy remains between this bar and this black bar. The only time I'm interested in this guy to take, in terms of taking any trades here, is if I see a decent break below this black bar right here around 1.24600. That is when I'll be confident enough to come on here and slam this guy to the downside. Now, the reason as to why I'm being this careful is because I have seen what the dollar index is doing at the moment. I've seen what USD CAD they are doing at the moment. Those two pairs still have some room to the downside, and you guys know that whenever the dollar index goes up, this guy falls. All right, and then inverse is the case for USD CAD. So, like I said, I strongly see this guy having some more room to the upside. All right, and I'll show you guys just in a minute why I feel like so. Why I think we may have maybe an extra leg up to test this trend line finally, and then before we actually come back down for a decent collapse. All right. Now this is not even giving us the ideal entry criteria, because even if I plot my lines like so, I still have this guy playing inside of this trend line. So I'm not in a rush, all right, until I see that we are out of here, because we could potentially, you see this rejection off of this demand level here. This was supply turning demand. You can see this rejection here. We came all the way down here, and then we actually spiked all the way back up. So this has held. This is still holding, and we could see this guy pull all the way deeper into these regions around here, like so, before actually collapse. Now, in the event, once again, in the event that I'm wrong, I like to see this guy come in here, even if this is going to keep falling from now to next week. All well and good. I like to see this guy clear this black bar at 1.24600. All right, now. One thing that you must understand is that as a trader, you must have an abundance mindset. There are lots of trades in the market. This is not going to be the only trade this year. There are lots of trades. There are lots of. This is just the second quarter. Do you understand me? So I'm waiting patiently to see what the market does around here. But for me, ideally, I would like to see this guy pull all the way into this bar right here, or maybe come deeper into these supply levels. You can see when we created this supply level here, we came all the way in. You can see we came all the way in. And that is what I have actually realized about this guy. We came all the way in here. So I will not be surprised to see this guy coming all the way into this supply level here to fill it up nicely. And why am I bearish on this guy? Well, Fibonacci points downwards, and then this is a clear break of structure and a pullback. So I still feel like we have some room to the upside on this guy here, to this supply level right here. So let's peak higher into this point, and I'll be looking for a bounce off of this level here, and then I'll hop on the sell trade. But overall, I'm bearish. This guy is bearish. I am also bearish. I'm just trying to be careful, not leaving no stone unturned, because as a trader, you have to also understand that you are a market FBI. Right? You leave no stone unturned. You are an investigative trader. I'm an investigative trader. I leave nothing unturned. I check every single thing, right? Because at the end of the day, this is my hard-earned money here. I don't know whose money you're trading, but for me, this is money is difficult to come by. Right? So the last thing you want to do is throw caution to the wind when you're in the FS market. All right, so that's that for GBPUSD. The next pair on my list now would be EURUSD. All right. I have a pair on my list now, which is EURUSD. What the internet's acting up, guys. Nigerian internet, man. So the next pair on my list now is the euro dollar, right? So this euro dollar has a similar structure to the cable, which is the Great British Pound, that's GBPUSD. And at the moment, it's something similar that we just spoke about here on GBPUSD, right? We do have a solid trend here happening on the daily time frame, on the weekly and on the daily time frame. You have both pairs breaking out of their respective ranges, and we are seeing this bounce here. However, we do have a trend line around this level, okay? And once again, judging from what the dollar index seems to be doing at the moment, I'm still favoring this guy. So maybe one last leg up, all right? One last leg up, and then we would actually collapse. You see this guy here, same thing happened. Anytime we create a supply level here, we go back deeper. We always go back deeper to test it. Created one here, faked out traders went higher again. All right, you get me? So this market has respected this trend line for a while, and it has been going higher to test the trend line. So I mean, I have solid reasons as to why, guys. I've been doing this for well over 5 years. All right, and I kid you not, I have seen I have seen things. I'm just put it that way. I have seen things. All right, so I would prefer to see this guy, bounce higher into this trend line here, and then we actually collapse it. Overall, we are actually bearish, and if you are bearish on this guy, you are right. All right. However, I need to see us come on higher to this bar right here. Maybe fake out a lot of traders, because I feel like this is still a premature confirmation for me. I haven't seen any confirmations as to why I should hop on this trade. In fact, if I'm wrong about this deeper pullback here, I'll kindly sit on my hands and wait until you come in here to clear this bar. Okay. Once we clear this demand level right here, because this was where the market broke above, retested, and then went all the way up. So I like to see us clear this bar right here. Once you can clear this bar right here, I see no reason as to why we shouldn't drop all the way to 1.05430. However, in the event that we actually clear this bar, I'm waiting for a pullback. Same thing you've seen here: break of structure, pullback, continuation. Yeah, break of structure, pullback, continuation is what I'll be waiting for. A break of structure, pullback, and then continuation to the downside. We have pips to the downside. So you have not a single reason as to why you should be worried about anything. We have pips to the downside. We have a lot of pips. Okay, we have a lot of space to the downside. I like to trade space. I don't like to trade ranges. I like space. So for me, like I said earlier, there's no rush. There's no rush. I'm waiting patiently to see what the market has to do. It's either we go up higher here or we come and break below here. Whichever one that the market wants to do, I am actually game. Now, the only thing that I will not be doing is placing a trade inside of here and then just wide stop losses above. No, I rather wait for this guy to break below this bar here. Give me an entry confirmation and then I'll enter the trade. So that's that for Euro USD in the nutshell. The next pair on my list now is AUDUSD. Now, AUDUSD did something very, very funny, which I wasn't surprised to be entirely honest with you guys. I was not surprised at all. Now, if you look at AUDUSD closely, you get to understand the reason as to why I'm being careful. I'm not trading caution to the wind when it comes to the rest of the majors. All right, so you have a daily trend here pointing to the downside. You have a weekly trend pointing to the downside. All right. However, we had this pullback in here. Now, if I plot my trend lines like this, like so, it looks to me like we have space. It looks to me like we have space to the upside. Okay. Okay. Okay, decent. So this is where my trend lines will be. All right. So this is the first touch here. This is the second touch. Most likely, due to what the dollar index is doing at the moment, we could actually see this guy pull back deeper into this region right here, like so. However, once again, like I always say, in the event that because if you bring this guy, this counter trend line right here, plot it from the very low here and take it higher, you see that we have a break of trend line and then retest here, and then we're coming back for that bigger retest here. All right. So also, but for me to take any advantage of this trade here, I like to see, because this is a double top. This was the supply level created here, all right, before this drop. So I like to see us come all the way back down and close below this black bar here around 0.6500, 0.65 thousand, actually 0.65000. Once I see a decent break below there, I'll scale down. Guys, listen, I'll scale down to my 1 hour time frame. All right, 1 hour time frame. You guys heard me, 1 hour time frame. That is where I'll scale all the way to. You can see that we had a decent break of structure, pullback, continuation. That is what I want to be trading on this pairs. Is that I want to scale down to my 1 hour time frame. Since I'm letting go of the first bounce. I hope you guys are paying close attention. Since I'm letting go of willingly letting go of the first bounce. That is first potential entry because of premature confirmations. I have to scale down to my 1 hour time frame and look for a decent opportunity inside of here. I'm not interested in this guy as long as we remain above here. I'll only be interested in this guy if I do see a break below this bar here. Once I see a break below this bar here, I have space. To the downside, all right? So it will just be a clear textbook entry of putting my probably 30-40 pips, and then I'm getting approximately 80 pips. All right, that is still something decent if you ask me. All right, this is about 30 pips here of stop loss, and then I'm bagging over 80 pips. All right, that is still something decent. A decent 1:2.5 is good to go. All right, so that's just that for AUDUSD, and also we have this trend line holding nicely. So I'll only be interested in this guy if I do see a break below of this 0.64886 region, and then so a break below this trend line, and then this buyer exposes the 0.63950 region, and then obviously subsequently we can collapse this guy all the way to 0.62904. So that's that for the also dollar. The next pair on my list is now NZDUSD. Now, guys, if you found value so far, I urge you guys to click the subscribe button. We are actually very close to hitting 1,000 subscribers. So do me a favor, hit the subscribe button and then leave a like and comment. All right. You can also share this video to as many people as you deem fit. So for NZDUSD here, I have space to the upside again. I'm super bearish on this guy, but at the moment I have space to the upside. Now the reason as to why I say so is if you look once again at your structure. All right, looking at the structure, because of what happened here, break of structure, supply created here, came out with retest supply. All right, break of structure, supply created here, it has to come out with retest supply. Do you understand? And let me just extend this bar like so. This is where we're at currently, and I see no reason as to why we should not pull up higher. Okay, when it comes to NZDUSD. So it's simple, it is easy, it is straightforward. We have a bearish trend on our hands. Okay, so this is also a nice little Fibonacci play right here. So I know that a lot of traders have gone short around here, and see, guys, these are the issues. All right, these are the issues. You have to be extremely careful when you're trading this pair, because every single minor fracas you see here could lead you into thinking that the market is due for a reversal, or the market is about to move. But you have to have solid confirmations in place. I have a decent supply level around here. Technically, this guy should come back into the supply. This is too early, in my own opinion. I should see this guy rally all the way back up into the 0.60200 region, probably fake out this trend line here, and then give me a decent flag pattern to jump on this guy. Provided that we actually stay this way, I'm not really interested in this guy because I'm not going to enter any trades here and then put my stop losses above here. Now the risk to reward doesn't even make any sense. So I'll be waiting patiently because I'm a swing trader, but then I like to use a structure based kind of stop loss. So going by the structure here, this is too high for me, and I rather wait for a break of this green bar here and a pullback. If at all I'm wrong, which I doubt it, I am wrong, because once again I'll take you guys to the XY and I'll show you guys what's happening. But for the NZDUSD, I like to see us pull back deeper into this trend line here, into this level here, which lines up perfectly with my Fibonacci 0.618. I love the 0.618 region. I don't know why. I just love it because 9 times out of 10 that the market tends to act like it wants to reverse here, then go all the way back up to the 0.618. All right, seen it several times. So I'm waiting patiently for this guy to pull all the way back in here, then play around here before I actually collapse this guy to the downside. And that's about NZDUSD. The next pair on my list now will be US oil. US oil. Okay, so now for oil, it is simple and it is quite straightforward at the moment. We do have a trend setting up nicely on oil here. So we were actually, I've been bullish on oil for the longest of times. All right, for the longest of times, I've actually been very, very bullish on oil. Let me just expand this guy. So we can see a beautiful formation of a demand level here happening on a daily time frame. All right, we've had this broke below here, was playing around, and now we've had this descent rally, and then this was the demand level that was created around here. So we have actually respected. However, I'm still not in this trade now. Reasons best known to me. I've seen the markets. By the way, you need to see the kind of job we had before that time. We had this engulfing kind of job, and then since then we've been playing around here. So US oil to $93.73 a barrel if we actually clear this counter trend line here. A 4-hour break and close above here, stop losses below here, target $93.73 a barrel. Okay. Now, provided we remain underneath this counter trend and I have no business with this guy, okay, we could actually pick back below into this point here because of what USD CAD is doing. Now the USD CAD and the US oil tend to move in the same direction at the same time. Do you understand me? So it's a bit of a 50-50 situation at the moment. We could actually see this guy drop back below to this green bar here, then break above this trend line, and then we actually see this guy rally to $73 per barrel for oil. Okay, so that's that for US oil. The next pair on my list is now US30. Now, for those of you guys that love to trade US30, this is for you guys. Okay, so there is a way you can go about mirroring S&P 500 and NASDAQ whenever you're trading the US30, which is what I strongly recommend. If you're the type who is going to be trading this guy, you have to mirror the S&P 500 because the S&P 500 and the US30 and NASDAQ tend to move in the same direction. They all correlate at the same point. All right. So the top-down analysis on the Dow Jones index is actually very straightforward. Yeah, we've had this similar rally that we've seen on S&P 500 when we came into this bar here, and then we've been rallying since the last month of 2023, and then this is Q2 2024, and this is where we are at the moment. So a decent pullback to this blue bar here would be ideal for us to go long, and I think that is what the market is doing at the moment. And if you look closely, scrolling down to the daily time frame, we have this this pullback happening right here. So ideally we saw this descent break of structure and then retest. So if you're the guy who likes to trade counter trend trades, you like to sell in an uptrend or buy in an uptrend, or maybe sell in a pullback of a downtrend, that is entirely up to you. But if you're going to take this trade here, as you can see, we've seen something that looks like a possible bounce, although we have a supply here, so whichever one gets to hold, I don't really care because the market has rejected nicely off of this demand level here. So what I would advise you to do is scale down to, since this pair is practically for scalps, all right, this is a scalping pair. I'm not seeing anybody trying to swing this guy. This is a scalping pair. So what you should do is wait for a 4-hour candle break and close below here. Scale down to your 1-hour time frame and enter your trades, obviously. But you also need to understand that this is scalping because you're going against the trend. The overall trend is bullish on this guy. So enter on 1-hour time frame or whichever time frame works for you, and take your profit at 36 565.01. All right, that is my prime target for the US30 in terms of pullback. I'm not going to be taking this trade because I'm not a big fan of pullback trades, but if you are the one that loves to trade pullback, then obviously risk a certain amount of your money here, because I can see some nice trend line holding here, a break below this trend line, and then this bar, we should actually see this guy drop all the way to 36569. All right, so that's that for the Dow Jones index. The next pair on my list now will be USDJPY. All right. So for USDJPY, we have had a rally. We've had a very long rally. We've been up for a very long time, guys. I started calling out USDJPY around the 140 region since the year 2023, January the 9th. If it doubts me, you can go back to my previous video, whichever video that has the USDJPY description there, check it. I've been calling this guy out since this point here, January 2023. I call this guy all the way from here to here. All right, and we made a significant amount of money in my Telegram community, which is the reason as to why I urge you guys to grab the course. Currently, it is at a 30% discount. Once my course is uploaded online, it is back to a standard $100 fee. All right, so do yourself that favor to grab the course at the moment. All right, come to my Telegram community. I teach you personally, and as you can see here, we have had a huge chart pattern playing out on the monthly time frame when it comes to USDJPY, and we just had the neckline break and a retest that has occurred here. And now, if you measure from here, from the head of this range to the neckline here, and then the principle of range trading states that the total amount of pips accumulated in a range, once the market breaks out, we have to give off that equal amount of pips, all right, which is something I also teach in my mentorship program. So we have actually cleared the all-time highs here, which is 150. So we have done just one third of this entire move. We have 1, 2, 3. All right, so we've just done 1/3. So we have 2 more to go. All right, and each of this is about probably 2,000 to 3,000 pips. So we have a long way to go, and this could take maybe 2-3 years to play out. So we have trades for the next 2-3 years. All right. So also what I advise you guys is that this pair does not pull back like your EURUSD and GBPUSD. So this is a swing pair where you just find some form of, actually when I scroll down to my daily time frame, I can see a demand level that was created and validated somewhere around here. So wait for that pullback here. I'm not saying we may have that sort of deep pullback. However, if I bring my Fibonacci and measure like so, we are actually heading to the point where a pullback is decent. A pullback would be necessary, would be decent at this point. So we need to see a pullback back to this demand level here, and find some form of entry there, and then hit your trades and hold, because this pair does not give you can see the kind of pullback we had. It's not as juicy as the rest of the pairs. Do you understand? So enter this trade here and hold your piece. Okay, wait for a pullback to this point right here on the daily time frame around the 152 region. Right, wait for a decent pullback. I'm not saying it's gonna happen, but ideally, if I'm to take this trade, I'll prefer to see a decent pullback all the way down here, and then I'll actually hop on this guy and then ride it all the way up. Now, the collapse of the JPY index and the rally of the USDJPY, it tends to signal that there's a global market crash coming. Now, I don't know when this is going to happen, but this is a strong signal. Now, I don't want to go too deep into macro economics, but looking at the way things are setting up nicely, you would not dispute the fact that we could be in for a 2022 to the 2021 to 2022 bear market run, and also the 2008 global crash that we had. All right, so this is lining up nicely now. The CPI numbers keep on coming out hotter than expected. NFP numbers hotter than expected, and the Feds have only one option here. All right, it's either they hold rates at where it is, or they hike further. Okay, do you understand? And once they hike interest rates, once they keep hiking interest rates, do you know what happens to the dollar index? It tends to rally, and once that dollar index rallies like that, you have every other pair, GU, AU, NU, whatever pair that you're trading at the moment collapse against the dollar. All right, and even gold as well. Do you understand? So I'm being very careful. Even even while trying to make money here, because the last thing you want is for this guy to pass you by. All right, you have to set yourself up nicely for a juicy run this year. All right, either this year or early next year, but it is gonna happen. So the next pair on my list is the CADJPY. So similar thing that is happening on USDJPY. We have a bullish run. We've had a bullish run for the longest of times. I've been highlighting this guy to the upside for the longest of times. Now we created a demand level somewhere around here. You see this spike up, pullback, rally. Now we need to see something similar. We have to see a pullback. All right. We have actually created series of demands. We've created demand created here. So I need to see us pull back to this level here for us to have a decent chance of running this guy all the way to the upside. So I would actually, I'm sat on my hands. I'm not in this trade at the moment. I'm waiting to see if we can get a decent pullback to this bar here to maybe 112.000 region. If I can see a decent pullback to that region, then I'm hopping on this guy and riding it all the way up. Now, pardon me for having so many lines on my charts. It's just that I had to be careful, of anything I'm coming out to tell you guys. I had to do my own work and check carefully so that I give you guys the most accurate trade calls as possible. So for CADJPY, we are clear bullish to the upside, a decent pullback to this bar here, to this trend line, and then this Fibonacci region here will be decent for me to go long on this guy. All right, now in the event that every other pair seems to be playing games with me, I have EURUJPY, I have CADJPY. Do you understand me? That is abundance mindset. You're not stuck to one thing, right? So EURUJPY also has the similar formation. Okay, we are on a very, very steep bullish run. We've not had any form of decent, huge retracement or pullback whatsoever. These guys are absolutely blowing up to the upside. All right, this is just, guy. This is when momentum supersedes price, because now this was the bar that I was hoping that the market would reverse from. However, due to the kind of momentum that we broke above here, this is looking like it is going to continue higher. But for me, if I'm to take this trade here, obviously I see a decent double bottom here, and this is the neckline. Technically, I want to see us pull back to this bar right here. So once I see a decent pullback here, I'll be very confident to hop on a buy trade, obviously to the all-time highs for that, due to what the USDJPY is doing, and then also the Japanese index is doing at the moment. All right, so that's that for EURUJPY. The next pair on my list will be the XY. All right, this is the dollar index. Hold on, guys. Let me just be careful. So the next pair on my list now is the dollar index, which is the reason as to why I said I was going to use this to explain what is happening and why I'm having a bit more of hesitation on executing the EU, the GU, the NU, and the Aussie dollar trades at the moment. Now we've had this guy in a range for the longest of times, and we just blew out of the range. Now you have this very bullish engulfing candle. Technically, whenever I have an engulfing candle like this, market has to pull back to it half of the entire move. This was an impulsive rally, like it or not. We need to see the market pull back to half of this move, and look at what we're doing. For 2 weeks, we've been ranging. All right. Now, if I scale down to my daily time frame, you actually get to understand what I'm talking about. We have a demand level here. This is where the demand level is. So I see this as a trap. For those of you guys that like to get into trades too early, you have to be careful and listen to me attentively. All right. This is what's happening here. I see this as a trap for you guys. We do have two types of trend lines here. We have, once again, guys, I've been doing this for 5 years. All right, so listen. Whenever you see me being extra careful like this, it is for good reasons. And whenever you see me being a bit hesitant to execute trade, it is for good reasons. This is not an analysis paralysis. This is me showing you what's possible and what happen in the coming week. Now have it at the back of your mind that we have NFP coming out on the 3rd of May, and typically the market seems to be a bit radical before, tends to be a bit radical before a release of a major news event. All right, so we had this range here going on for a while now. So this is giving us some form of downtrend here, where we'll have, I think this is going to be third touch of this downtrend. Okay, so this is the first touch This is the second touch. This is the third touch. If I scale out my 4-hour time frame, you're gonna see clearly. So we've had a break of structure and we've not had any decent pullback to that structure. That is my problem. All right. This was the demand level here. Ideally, this was what birthed this entire rally to the upside. So we should see a pullback down to this point here, and that will line up perfectly with the trend line, and then also Fibonacci region right about here, and then we're actually a lot more confident. Now, whenever things like this happen, this is a trap. Do you understand? This is how it happens. It's a trap. The market acts as if it wants to reverse off of this minor level here. However, this is where the demand level is. This is not where it is. This is the demand. This is the demand level. Okay. So this is where it happens. You see, if we broke above here, came back to retest it, then rally all the way up. This is where it is. This is not where it is. So you have to be extremely careful. This is where the demand. And once again, I urge you guys to grab the course. Find the link to my Telegram community in the description of this video. Send me an email if you like to, enroll for the mentorship program. It's just about $70 for the moment. Once the course is uploaded and is online, it is back to $100. All right. So find the link here and come to me. That I teach you personally for the moment. So this is the demand. This is not the demand. This is the demand level here. We have to see this guy. Either I'm not saying that it's going to happen, but I'm saying, in my own opinion, I just feel like this is a premature confirmation. We could actually see this guy pull all the way back down to this point here, following the non-farm payroll numbers. All right. So that's just that for the dollar index. The next pair on my list now is BTC. Now for BTC, those of you guys who are crypto enthusiasts, the halving of the BTC is no news to us. All right, you guys have been there, you've seen it happen, and we are actually very, very positive and optimistic for what the future holds for the cryptocurrency world. Okay, however, as traders, we trade what the market is doing at the moment. Okay, so this is BTC in a nutshell. Where are my levels? Nigerian internet, where are my levels? So this is what BTC is doing at the moment, and before this entire rally all the way up here, I was very, very careful about this guy, and I said to you guys, this is too linear. Okay, same thing happening on gold. This is too linear. You have this, there's no descent pullback whatsoever. All right, now this was the solid supply that was created somewhere around here, and the market reacted nicely. And now we have actually blown through that demand level, or rather a supply level, and then we are actually all the way up. Now, technically speaking, this is where the pullback should come into. All right, this is where the pullback should come into the regions of maybe 48,500 and $50,000 per coin region. Now for BTC. All right, for BTC, for those of you guys, once again, that like to trade counter trend trades, all right, I like to see us clear this demand level here. This is a demand level that has held this guy, all right, in a range. And mind you, the market has already started printing lower highs. So this is a low, this is a high, lower high here. So lower low in here, which will also be the break and retest of this black bar here. We should see BTC drop to 50K per coin. Okay, now I'm not saying that I will take a counter trend trade. Nope. I'm just saying that with the way things look at the moment, we should see BTC drop below all the way to 50K per coin, and then we can now rally to new highs from there. All right. Like I said earlier, this guy has started printing lower highs right here. This is the high. This is a lower high. And technically speaking, once we created a lower high, we tend to come in for a deeper pullback to maybe an equal low or a lower low. All right. So price action wise, technically speaking, we are actually bearish on this guy. So, but for me to take a trade here, I have to see this guy clear this black bar. Once he clears the black bar, yeah, it exposes the 50K per coin region. All right. So thank you so much, guys, for watching to the end of this video, and make sure that you hit the subscribe button, like and comment, and share this video to as many people that as you deem fit. All right. So once again, my name is Desmond Samuel, and I wish you guys a good and solid profitable trading weeks ahead. And once again, I'll be back next weekend. We get another banger, and obviously the result of the outcall so far. Thank you so much, guys, and peace out.